Okay, good afternoon, ladies and gentlemen. My name is Kyle. On behalf of Green Investment Group, I will be taking you through our investment philosophy and just give you a bit more in-depth explanation as to how we went about creating our portfolio. Okay, so our investment philosophy, we focused on the following fundamentals. Investing in a stock when its share price is undervalued to its intrinsic worth, placing higher emphasis on preventing loss rather than searching for profits, actively pursuing consistency rather than searching for top quartile results, and finally being contrarian in our approach whilst taking market cycles into account. Okay, our process and focus that we followed on when we were setting up our portfolio included looking at specific equities with the market capitalization, specifically for small and medium market caps. We took into account factors such as price to earnings ratio, looking for stocks which had a PE ratio of lower than 14. We looked at dividend yield, with the stocks offering 3 to 10% returns. We also took into account price to book ratios, as well as the general philosophies and principles embedded within the value investing style. When searching for our shares, we looked at databases such as Reuters and Share Data Online, as well as just going through the business day and having a look at the financial indices contained therein. Okay, so here we have our initial selection of shares, which were shortlisted, comprising of 30 shares based on the above criteria. Right, the optimization of the portfolio. We found that reducing our exposure to risks in currency fluctuation, resources and commodities, particularly oil, copper, gold and platinum, which has been considerably volatile in recent times. Given this, we recognize that care and importance of balancing the protection and growth of our investors' capital in order to promote wealth creation. Just to reiterate, 4 style characteristics were chosen based on their proven positive effects when used in combination. The chosen combination comprises of momentum, return on capital, cash flow to price, as well as earnings yield. So here we just have the optimization of the portfolio, and this is just used to indicate that we made use of Excel macros and solver functionality in order to determine the optimal exposure between the splits per company share. And here is our final portfolio breakdown, broken down on the right hand column of each. In the red you can see the cash exposure per share. What we can see here, I'm not too sure if it's too clear on the slide presentation there, but we've just broken down our top 30 shares in order to provide a bit more detail on each company, and this detail includes market capitalization, price to earnings ratio, dividend yield, price earnings to dividend yield, price to book, the beta of each share, and the number of shares outstanding per company. So of course this is all hypothetical, but should we have done this in earnest, we would have taken into account several integrity tests, the first being the Altman Z-score. This is multiple variables that assist in predicting the probability of bankruptcy within 2 years. What you can see here is just randomly selected shares. We chose 10% of our portfolio, which obviously equates to 3 shares, and they are AdCorp, Synergy Inc. and Huduco Industries. According to our calculations, both AdCorp and Huduco have a low likelihood of bankruptcy, while as with scores of higher than 2.6, whereas Synergy is within the grey zone with a score of 1.93, which might be an indication that there could be potential problems within the company. And according to our calculations, this can be attributed to poor liquidity. Secondly, we had the Petrosky Fundamental Score, which reflects 9 criteria used to determine the strength of a firm's financial position and is focused on the following areas, namely profitability, leverage, liquidity, source of funds, and operating efficiency. It's used to determine the best value stocks and gives a score between 0, which is the worst, and 9. This is just dummy data that we inputted here, just to give a sense of how this would play out graphically if you had to plot it on a chart. Our third integrity test, again, was Merton's distance to default. This model is used to understand how capable a company is of meeting its financial obligations, including servicing its debt and the general possibility that the company could go into default. The higher the score, the higher the risk of default. And there's generally a correlation between this and the Altman Z score. Once again, this is just dummy data provided, just to sort of provide a graphic illustration of how it would look should we chart this data. Finally, we made use of Benford's law, and this law tests for the validity or believability of line items which grow or shrink naturally, and can be used as an early warning indicator to detect fraud within any of our stock selections. We decided to test this just on one stock, being ISA, with the results showing that we should cautiously approach ISA, as some of the Benford rules have been sort of broken and resulted in failures. And we not suggesting that any fraud has taken place, but just perhaps that further investigation needs to be taken into account, particularly with the third digit test. Okay, so in closing, we just felt that we would, sort of put our thoughts together as to what we thought were the most important aspects that we had learned over the course of the 4 days. And that can be summarized as follows. We felt that the most important factor in investing is ourselves. In the world of investment decision making, central roles are played by human emotions such as fear and greed, as well as psychology such as overconfidence. The number one rule is you need to buy good assets at good prices and wait. And finally, the importance of second level thinking when embarking upon this journey of investment management. I'd like to close off with a quote from Oak Tree Capital, where they state that if we avoid the losers, the winners will take care of themselves. We feel that this is, really an approach that we would like to take within our company at Green Investments. So thank you for your time. We look forward to hearing from you. Thanks.